What's up, YouTube? This is Schrute Stock Squad, and today's date is Saturday, March 27th, 2021, and this video is for entertainment purposes only. Guys, you know I'm just playing around with that intro. Figured I'd change things up on everyone here. Okay, so in this video, I'm going to be talking to you about the current market conditions, how we want to play the next week or two, and some basic math on penny stock plays and CTRM and, you know, those sort of things. I really want to hammer in some points because I've been getting a lot of comments about this stuff. So stick around with the family here, and I think you're going to like what I have for you. If you're new to the channel, guys, this is Schrute Stocks. I show you my journey to $1 million openly, transparently. There's no screen cropping out, no BS like that. And all I ask is that you hit that like and subscribe button in return. Many YouTubers, many people, even if you sign up for their Patreon, they will not show you their portfolio as openly and transparently like this. Let me tell you something. When people need to show you the 1 week, 1 month, 3, 1 all time, that's where you actually get to see had they put in money to pump up their portfolio, you know, because it's easy. I can make my portfolio right now go up to 150 by Monday if I really wanted to. But I'm here to show you that it's not all rosy and, you know, it's not always going to be green in the markets like that. So this sort of transparency, I'm going to show you in real life like that. Okay. So with all that said, let me get into the video. So guys, I'm going to start out right now. All right. The next week or two, even a little bit beyond that, just expect the market to be a little volatile. You know, this up and down. We've been getting green days, red days, buy the dip, don't buy the dip, whatever the hell it's been. Look, guys, it's going to be murky. And the way I'm telling you this from my experience, okay? Whenever things get murky like this, the best way to play it is your foundation layer stocks. You buy in on those. Forget the penny stocks, forget the home runs. Buy the penny stock, buy the foundation layers right now, okay? If you want to play into some of those quicker money grabs, because yeah, they can have some good catalysts, you can do it. But I suggest if you're going to do that, if you're going to play around with, you know, those penny stock plays, do that after you've bought into your foundation layers, okay? So with all that said, I'm going to tell you, NIO, like look at this. NIO's sitting at $35. My price beforehand was 44 bucks. This is a steal for me. If it's in your foundation layer, that means you're going to keep it 5 to 10 years. And you don't, like, who the hell cares if it dips right now? You know what I'm saying? Think long term, guys. Your foundation layer should make up 40 to 60%. If you're a beginner, I want you starting at 60%. Then your next layer up. So think of it. I always tell you, think of your portfolio like a cake. Foundation layer, medium layer, and frosting. And honestly, if you're a beginner, you haven't earned frosting, all right? You haven't earned the frosting. So what I mean by this is this. Your foundation layer makes up, these are stocks, 4 to 5 plays that you believe in long term, 5 to 10 years, all right? Go back to my beginner investment video. I didn't just make that up for fun, okay? It's there to actually help you guys who are just starting, okay? 4 to 5 plays that you're going to believe in 5 to 10 years, okay? This can be Apple, Google, Amazon. If you're new and you don't know anything about stocks, you know, this is the easiest way to start. If you don't know a damn thing about stocks, look around your house for the next 3 days, okay? And take a note of what brands that you continuously use. Do you use Google every single day? YouTube is owned by Google, right? You watch this, you're watching this on YouTube, so think of that. Are all the shoes you've owned Nike? Are you using an iPhone, iPad, MacBook, things like? This is how I want you to begin thinking, okay? Pick 4 of those stocks, pick 4 of those companies that you use daily and you've used for years and you're planning to use for a long time as well, okay? That's how I want you to start thinking, okay? Now, that's a foundation layer that you can begin with. And that's on the conservative side. If you're more aggressive with your portfolio, like what I'm doing, even though these plays, I still believe in long-term 5 to 10 years. NIO, STPK, let's be real. NIO is more risky play than Tesla, okay? I don't care what anyone says. NIO is a more risky play than Tesla. Tesla has been there longer. They've been more established. There's a reason why Tesla is worth what it is, and NIO is worth what it is. One's in the beginner stages, one's in the later stages. Even though I still think Tesla's in its beginner stage, but you know what I'm saying with that, okay? They're still safe. These are still safer plays than some of these other penny stocks that you're going to see hyped up on YouTube, all right? I'm only telling you this because I don't want to see my family getting burned. So the way you play things right now, when the market is so murky, up and down, you don't know what the hell it's doing, you buy in onto these foundation stocks and you dollar cost average in. That doesn't mean I have 6,000 here. That doesn't mean I'm going to put 6,000 into NIO come Monday. The way to do it is you pick a certain amount that you want. Let's say it's 500. Let's say it's $5, $2. I don't know where you are and how much buying power you have. But all I can tell you is the way to do it is pick whatever chunk of money and just dollar cost average into it. Pick Monday, Wednesday, Friday, all right? And put 1/3, 1/3, 1/3. And rinse and repeat that for the next 2 weeks. Okay, I can't speak specifics because I don't know everyone's situation, but that's how I want my family here to be playing it. All right, whatever's in your buying power, just dollar cost average, 1/3, 1/3, 1/3, Monday, Wednesday, Friday, and then do it again the week after. Okay, like, you know, that's assuming you put more buying power in and, you know, whatever. So that's how I want you guys to be playing when the market is this volatile with up and down. I'm only speaking about this because let me tell you, you can read books and all the stuff that you want, and which I have read a bunch of books on this. Until I put my money into the market, this is what I've learned. Every lesson I'm teaching you is not from something I've read in a book. It's because I've made all the damn mistakes myself and I've learned from them, and that's why I'm able to even show you this thing. Okay, I didn't wake up one day with this sort of money. You know, I had I had to learn this firsthand on my own. So that's why I keep telling you. When I first started with Tesla, when I was first beginning investing in 2013 and 2012, all that time, Tesla was doing same thing. It was going, I bought in on it and it dipped. And you know what I did? I learned about, I was thinking maybe do I cash out? Do I do this? No, I bought in on the dips and I kept averaging over time, guys. That's how you play things, especially if it's a foundation stock. I did that with Apple, and that's what I want you guys to do. Think of which stock you think is going to be big in the next 5 to 10 years, and then do that, okay? That's all I'm going to leave it on that. So that's your foundation play. That's how you play the murky conditions, okay? Your next layer up is your middle layer, right? 1 to 2 year plays. I'm putting this thing at 30% of my money is in the medium term plays. And then your frosting layer on top, that's the 20% that I have. If you're a beginner, you don't get any frosting, all right? If you're a beginner, 60% of your money should be in a foundation layer stock, and then 40 is in the 1 to 2 year plays. I don't want any of my beginners to be going into these like penny stocks too much. If you want, maybe 10%. That's all I'm giving you on frosting, right? That's all I'm giving the permission for my beginner investors, okay? Because you haven't learned how to develop patience. Quite honestly, if you want to succeed in the market, it's just a game of patience and not being stupid half the time, and like, you know, cashing out, doing this. So what I want to talk about now is some of the comments I was getting. I had some people make comments about. It was a good question about these penny stock plays. All right. In these penny stock plays, I keep telling you risk management. Okay, that means trailing stop loss, knowing when to exit, when to re-enter, support levels, and how to do those sort of things. Right. It's a good question, and he was asking about, well, when you put in your trailing stop loss, and let's say you cash out, so now you're down, let's say whatever amount of money. When you buy back in, how do you know when to like cash out at that point? And what do you do if that thing dips? And when do you break even? And what do you do? And I'm going to walk you through some basic algebra, and I don't even think it's algebra. I don't know what it is, but it's basic math. Okay, it's no more complicated than multiplication and division. So if you can multiply and divide, I think you're prepared for this video. If not, go check out Khan Academy and then come back to this video, and we can take it from there. All right. Understand though that trailing stop loss idea and cashing out and buying back in on the dips and all that stuff. Those are your penny stock moves. These foundation, I was getting these comments too. What about these NIO, Palantir? Should I cash out, buy back in on the dip? No, guys, no. If it's in your foundation layer, you hold that. If you see this thing dip, you buy more. That's how it works, guys. These are not stocks which you end up doing that sort of like trickery with, okay? Your foundation layer stocks you keep, and when you see this thing dip, let's say it dips, let's see how much this thing has dipped. Okay, look at NIO. In the last 1 month, it's dipped 26%. That's a lot. That's a lot of, really went down. And I trust me, I'm feeling it too, all right? I don't like the price that it fell down to. But this is not one I have a trailing stop loss on. This is one I'm going to buy in on the dips. And the reason why NIO went down is because they had that report with, remember, the semiconductor shortage, and then NIO said that they're not going to be able to, they're not going to have as many production numbers of their vehicles as they initially estimated because of this shortage. It's still higher than anything from last year. It's significantly higher than last year. You know what I'm saying, guys? And this is when the market decides to overreact. I keep telling you from the beginning, think of the market like a relationship where, you know, people get emotional and they overreact and they say stupid things and they do stupid things. This is the market getting overreacted by some little bit of a bad news, and then it's gonna, you know, it's gonna end up doing its thing. It's gonna tank the stock because it can't think long term. All right, and that's what it is. Do I think this semiconductor shortage is gonna exist for 10 years? Absolutely not. This is gonna make a lot of people a lot of money. I think this is a blessing in disguise, in my opinion, and I'm going to be buying in on NIO come Monday. So let me just get into this example because I'm rambling a lot here. Let's get into what I was saying with CTRM or any of these stocks. So I'm going to give you what this guy was asking me. Okay, let me pull this thing up. Okay, so he's like, can you talk about the actual money, loss, and profit when you make a play, such as exiting and rebuying a couple cents higher? Like, how high would the stock have to go for you to break even on the loss you took? And that would help a lot of us and actually feel good about doing plays like that. This user's name is iPath23. Thank you, bro, for all the support. And it's an excellent question that you had for me here. And a lot of people must be having this question too. So I'm going to get in on this thing. Let me get the drawing board out. Okay, guys. So remember, this is penny stocks rules. Okay, these are when you have those trailing stop losses and it cashes you out, buy back in, penny stock. Okay, so I'm gonna give you an example. Okay, this is a great one, Zomedica. Okay, remember what happened with Zomedica, right? When you exit some of these plays and buy back in at the proper support levels, they ride back up. Okay, so you bought it here, and then your trailing stop loss cashes you out right here, and then you buy back in over here, and then it slingshots you up way here, and honestly, it could even go beyond that. And that's how I tell you. All right. And remember, these are the support and resistance lines that I always talk about for those plays. All right. Now, the thing that he's asking is, let's say you put in $100. Let me make this clear. So let's just say you initially put in $100 into Zomedica at a price of, let's say it was $1.80. Okay. I don't know, it's not working. At a price of $1.80. Okay, if you put in $100 at $1.80, and then let's say this thing then put a trailing stop loss at 10%. Okay, so when you buy $100 at $1.80, this gives you 55.55 shares. And when it cashes you out at 10%, your exit price is now 1.62. Okay, so that's what the trailing stop loss is going to do. Okay, let's just say it tanks and it goes there. Now, what happens after that is you now lost $10. Does everyone follow? You had 100. It's going to cash you out of 10%. What's 10% of 100? $10, right? So you just lost $10 and you're out. Okay, so how much money do you have now? You have you initially started with 100 minus 10 equals 90. Guys, I know I'm making this thing sound simple and dumb like that and I do this for a reason, because you can find the same principle taught by many big financial experts and they're going to make it the most complicated thing on earth. How many times have you watched any of these videos and you were just lost at the end of it? What do I do, guys? I make things as basic as possible because people overthink some of this stuff. I'd like to think of things like as a cake, and I like to think basic numbers like plus, minus, this and that. So now we have $90. And when I say, and so you initially had it at $1.80, and what did I say was another support level or something? I think it was, I know in my previous one I said $1.50, but let's just say you buy back in at $1.30. Okay, let's say that's the next support level. So now you have the $90, okay, and you buy in at $1.30. When you put in 90 divided by $1.30, this now gives you 62.23 shares. Okay, 62.23 shares. Before, how many shares do we have? Just like 55. Now we have 62 shares. Okay, so you just have to do a basic equation, because look, we're still down $10, right? We are still down $10. So we want to get back our $100 investment, right? We initially had 100, now we're down 10, so we only have 90. We want to make it back $100. So you just do a basic equation here, all right? Sorry, this wasn't 62, sorry. It was 69.23 shares. I messed that one up. I'm just looking at my notes. So it's 69.23 shares. Now, it's a basic equation you do. 69.23 shares times X has to equal $100, because we want to make back our initial investment. Divide both sides, 69.23, 69.23, okay? and X ends up equaling $1.44. Okay? That is where your new value, once it hits this thing, $1.44, you now have earned back your initial $100 investment. Okay? So that's break even. So let's just say you're trying to FOMO and you don't know what you're doing, and you do this thing. This is when you end up making even money on the play, and you can cash out if you want, but you know what I always tell you, have the trailing stop loss. And this is just a generic example, but you can keep writing this thing up if you want, different things like that. So this is a basic example, and I think it's a huge important concept. Quite honestly, this is a very important concept, and I really thank you for asking this question. What's your name again? iPath23. Very, very good question, and a lot of beginners must have this thing. I know I did when I first started as well. So guys, if you appreciate this sort of openness, this sort of transparency, you like my approach to investing, please consider joining in on the Discord. I have the link in the Patreon below. We have so many investors there who have just beginning or who have just been investing for a while too, quite honestly. Some of these people have been investing even longer than me, but every person is learning and every person has been growing their portfolio. And the benefit is this, the only thing that we ask is you take the investment journey seriously. Those are the only people that we have riding with us. We don't take people who don't take this thing as who are taking this thing as a joke. This is your real life. This is forget your life. This could be your kid's life, your grandkid's life, and generations. Money has a huge influence in life, and quite honestly, some people take their own lives because of money. It's really sad. So all we ask is, if you're trying to improve your game, consider joining in there, and we can go from there. All right. With all that said, you know what I'm going to say. Stay happy, stay healthy. Let's get wealthy. Take care.